Good morning, dear students.
Good morning, Professor.
Good morning, sir.
Good morning, sir.
Today we are going to start new chapter, Introduction of Corporate Finance. This is a really very interesting chapter. And the topic what we are going to be cover these are what is corporate finance, concept of corporate finance, corporate investment, financing and dividend decisions, the relationship between the corporation and the financial market. At the end, we'll discuss the topic, the financial goal of corporation. So let us start with what is corporate finance. Corporate finance is an area of finance that deal with the sources of funding, the capital structure of corporations, the action that manager take to increase the value of the firms to the shareholder, and the tool and analysis used to allocate the financial resources. In this way, for example, a corporation may choose to invest its resources in a risky venture to offer its shareholders the potential for large profit. Conversely, if the corporation invests too unconventionally, it could be failed to maximize the value of its equity. Or we can say that the value of shareholders, or another word, the wealth of shareholder. As we know that all shareholders or investors want to increase their value, their wealth, and corporations are working towards. In this way, sometimes corporations are taking decisions to invest in a risky projects or products that is known as venture. But as they mention here is a possibility to fail their investment. So once it will be failed, the investors will lose. So that's why corporate finance is a very important and skilled knowledge of finance. Let us move for the next slide. So after getting that corporate finance, we want to know that what is corporation, because the corporate finance have a responsibility of corporations. So it is important to know about the corporation. In simple word, a business organized as a separate legal entity owned by the shareholder. Or in other words, we can say an impersonal legal entity having the power to purchase, sell, and own assets, and to incur liabilities while existing separately and apart from the owner. It means we are dividing here that owner's role as well as corporation's role. Corporation's role is apart from the shareholders, or we can say for your understanding that there is no relation between the owner's decision and corporation's decision. Corporation decision is taken by the CEOs or the manager or managing director. Shareholders have no role to take the decisions towards the corporation if they are not directly involved in their corporation. I will explain to you later, just being with me. First, we'll discuss type of corporation. Public companies could be a corporation. Private companies or private corporations, mostly corporation is known as a private companies. Those are running under the Company Act. Also, limited liabilities companies are coming under the corporation. So now we'll discuss about the advantage and disadvantage of corporations. First, advantages: limited liability of owners. Here, owner are responsibility only the money what they invested in the corporation, not more than that. It means if corporations took a liability from the market, from the bank, whatever, owners are responsible only the money what they invested. This is the first and important advantage for the owners. The second thing is that easy of transferability of ownership. That is, by the sale of one share, we can say that is stocks as well, to the another. It means any individual who invested his money in X company, simply if they don't want to continue with this X company, they can sell the share to the other investors and they can quit. So it means it is easily transferable ownership. If you feel you invested in some company and you feel after that that this company is not giving you the profit as per your expectation, you can sell. Or maybe sometime the financial need arise for you, that time you can sell the share and get back your money without going to the company back and returning their securities. So this is another advantage of corporations. This is also important. The death of an owner does not result in the discontinuity of the firm's life. It means corporation is not going to be bothered about the investors. Some corporations have a millions of owners, so if anyone will be die, it is not going to be affect the corporation because his transfer or his securities itself transferred to the other person. The last, ability to raise large amount of capital is increased. Here, this is also a good advantage if it is a growth organization, growth corporations. So many investors are looking to invest their money over there. So it is easy that if your corporation is well-known corporation, your company is very famous in the market, you have very good goodwill or credit worthiness, you can raise whatever fund you want from the market. But same as the advantages, some disadvantages also associated with the corporations. Number one, most difficult and expensive procedure of business to establish. Because here when you are going to establish the corporation, you need a such amount, and when you are going to be registered your corporation with the security markets, you have to pay the registration fee. So many formalities, many paperwork is required before establishing. Not only paperwork, it's a huge amount of money is also required to start any corporation. The second thing is that control of corporation not guaranteed by the potential owner. This is also very important. Suppose you brought an idea, you are going to be start a corporation and you are going to be manage the fund from the market. Once you are going to be start the corporation and it is going to be run by the Company Act and you transferred in the hand of the board of directors, owners cannot be interfere much on that. Board of director or managing director or CEOs will take the decisions how to run the corporation in light of corporate law. Understand? Some other form of the business organization also there other than the corporation. Just need to give you the brief information, then we'll go for the corporation or corporate finance. Type of business organizations are sole proprietorship business, a business owned by a single person that has a minimum amount of legal structure. Any individual can start their business with a small of money, but it could not be a corporation. It is just only a sole proprietorship business. Also, you know that is a very famous in the market, partnerships. An association of two or more individuals coming together as a co-owner to operate a business for a profit. So as normally we are telling that two or more than two people can start their own business. It is known as partnership. So it is not going to be run under the Company Act. They can run as per their understanding at the state where they are establishing their organization. Normally in partnership business, we are having the option of limited liabilities. Limited liabilities of partners or partnerships or limited liabilities of companies. Both are there, limited liability companies and limited liability partnership. Meaning of limited liability, the owners of a corporation are not personally liable for its obligation. Limited liability means they are having limited liability towards the corporation or the company or partnership. Hope you understand. Shall we carry on? Now we are going to be discuss about the concept of corporate finance. Corporate finance deal with the capital structure of a corporation, including its funding and the action that management takes to increase the value of the company. Corporate finance also include the tool and analysis utilized to prioritize and distribute financial resources. In other words, we can say the corporate finance is based on three most fundamental decisions in corporate finance, which are investment decision, financing decision, dividend decision. So we are having three decisions for corporate finance: corporate investment, corporate financing, and corporate dividend decision. These are very important. Just I will give you a brief, then we'll start the thing that how we are managing it. Investment decision is very important because you want to know that where you are going to be invest. Once you decided to start your corporation, you cannot be start without the vision. Vision is that what product you are going to be produce, in which market you are going to be deal your product and your project, and what type of activity you are going to be concerned. Also, you need to know that how much investment is required in that project and product. After that observation, you are going to be collect the fund or the money. It is known as financing need. It means we are going to be observe the financing need. Once we get to know that, we are going to be sell our securities in the market to raise the fund. This is either with the common stock, preferred stock, or debit stock. These are known as securities. I will let you know in the next chapter. So being with me in my videos, you will get a lot of information in the different videos. Also, we are going to be know that after doing this process, means we are getting fund from the market, we are investing our fund in the market. Through this process, we are going to be accelerate our money, increasing our money. For rotation of money, we are going to be get the surplus money. This surplus money, you are very much aware, it is known as profit. So this profit is belong to the investors, those invested their money. So this is also corporate decisions that how much money they are going to be distribute among them as a dividend decision. So these are just brief information regarding the investment, financing, and dividend. Let's start with the investment decisions and how we are taking this decision. This decision is based on first cost of capital. We know that when we are going to be invest, we need investors need one particular amount of return. That return is our cost of capital, because when we are going to be run the venture, we must be pay that much of cost against their investment. So this is a full chapter. I have one full video regarding the cost of capital. You can go through it. You will get full information regarding the cost of capital. Capital budgeting. It means how much money you are going to be invest and what type of activity you are going to be do it. It will be covered under the capital budgeting. Again, the same video is available for capital budgeting. You can go through it. You will get the full information regarding the capital budgeting as well. Project management. We know that we are going to be invest against the project. The investment is in the project to get more money, and for that reason we are collecting the funds or raising the funds or getting the finance. So this is also important to know that in which project we are going to be invest and what we will get against our investment. The last, security analysis and portfolio management. We have to be analyze our security. It's important to know that, because in the securities we are investing either in common stock, preferred stock, or debit stock. Or we need a portfolio. It means we are not going to be invest with one particular security or other particular security, or not only one company, maybe many companies, to manage our investment decisions. Next, we'll go for financing decisions. In financing decisions, we are going for financial forecasting and planning. It means if you are going to be accelerate your business, increase your business, you need fund, you need money. That money will come from where? So before you should be decide that how much money is needed. So that's why it is called forecast and plan. Again, you will get the full video regarding the chapter of financial forecasting and planning. You go through the channel, you will get all information regarding the chapter. I'll bring you soon. Working capital management. Working capital management means how we'll manage our day-to-day activity in the corporation. Means we are paying salaries, we are spending money, we are paying electricity bills, or we can say that short-term needs. We need money to manage our short-term needs. Whenever we are talking here in finance, or you are aware with the accounting, short-term needs is within 1 year needs. Or when we are talking long-term needs, it is more than 1 year, up to the years, 5 years, 10 years, it's depend. So here we are talking about the working capital management. So working capital management, if we need any money for short period, we can get from the investors for short period. Because if we need for short period and we took for a long period, it means the cost will increase. So it's also very important decision. Hope you understand. Any queries, don't forget to put your notes after completing this video. Capital structure decision. This is also an important decision when we are deciding that our securities. So we want to know that how much share we have to be shared with the common equities, how much securities are shared we have to be shared with the preferred stock, as well as debt. As you know that debt is the cheapest source of finance. I will explain when we'll go for the valuation of stock or valuation of debt. You will get all information over there. We continue and you will see all videos will come time to time. It will be increase your knowledge. Raising of funds through debt, issue of share and debenture, etc. This is fulfill your finance need. Next, we are going for dividend decisions. It's include computation of distribution profit. It means whatever profit we got, how will company compute that, to whom will give how much and how much we will reinvest. All decisions are coming under the dividend decision. So it means management of retained earning. As I told you that just now, we have to be think that how much money we want to reinvest with the corporation. So this reinvestment is known as retained earning. Means earning is retaining with the corporation. Dividend policy and practice. We have so many dividend policies. Again, I'm telling you, my video is available full on dividend chapter. Go through it. You will get to know that how many policies are there and what the procedure to distribute dividend among the shareholders. Also, we have to be calculate the dividend and valuation of securities. It is also important that what dividend we are going to be paid to our stockholders, our security holders. We need to evaluate time to time to know that the value, intrinsic value, as well as the firm's retained earning or return required rate. So after getting the information related to the investment, financing and dividend decisions, we need to know that the relationship between the corporation and financial market. As you know that once you are getting that where you are going to be invest and you need fund, you want to raise the fund or you want to get the money from the market definitely. And you know that market is a place where we are buying and selling the products. So products either a real product or financial product. Real product, as you know that this is like a mobile phone, car, house, etc. When we are talking about the financial product, it means you are selling and purchasing securities. These securities could be a common stock, preferred stock or debt. So here we are going to get to know that once corporations are deciding that how much money they need, so from where they will get? They will get from the financial market. Let's explain more. The popularity of the corporation stem from the easy in rising capital that it provides. Initially, the corporation raised funds in the financial market by selling securities. The corporation then invested these cash in return generating assets, either in trading business or in manufacturing business. Trading, as you know, that purchasing the finished product, selling as it is. Just in purchasing and selling, they are getting additional money. That additional money is known as, or surplus money, that surplus money known as profit. In manufacturing organization, they are purchasing raw material, converting into the finished goods and then selling back, and through this process they are also getting additional or surplus money. So that surplus money is known as profit. Then they are doing this profit treatment. What is the profit treatment? Means the cash flow from those assets is either reinvested in the corporation. It means whatever surplus money you got, either you are going to be reinvested in the corporation or given back to the investors in the form of dividend, or interest payments are used to repurchase the stock, which should cause to stock price to raise or give to the government and in the form of taxes. This is the whole things what we are doing in the corporation. So let me explain through the diagram. It may be more understandable. So this is a diagram that the corporate finance, the relationship between the corporation and market. So here you are seeing that a big building, it is showing that corporation, and in either side you will find that investors. And Below the investors, you will find a circle. The arrow circle is rotating. It is showing the secondary market. So first, if you see, the cash is coming from the investor to the corporation. And the second, you will find the arrow that securities are going from the corporation to the investor. It means corporate is getting money, getting fund from the investors against the security they are providing to the investors. Securities, as I explained you before, either common stock, preferred stock, or bond. So the third thing is that third arrow is showing from the corporation to investors again. If you'll go with the straight arrow, you can get to know that they are giving cash flow as a dividend to the investor. We already knows that what is dividend, and I already explained to you that if you want to know about the more in dividend, you have to go for my video related to dividend. We have 4 videos already there. You will get to know the more information. Again here, you will see the one arrow is coming on upward, that is known as reinvest. It means the cash flow, the money what you add, you get as a surplus money. So you are going to be reinvest with your corporation to grow your corporation. And the last arrow is showing the down, and it is reflecting to the government payment as a taxes. So it means we are going to be paid taxes to the government. Hope you understand. Now we'll go for the financial goal of corporation. Financial goals are based on the stockholders. Stockholders means same shareholders. Don't confuse it, okay? Wants, and they are having following 3 requirements from the corporation. Number 1, to maximize current wealth. Means investors want to maximize their wealth, means value. To transfer wealth into most desirable time pattern of consumption. It means they want to use that wealth when the time will become, suitable time will become for them. And the third, to manage risk characteristics of chosen consumption plan. It means as per their risk plan, they are consuming that money. In continuation, profit maximization. Profit maximization, it is not a well-defined financial objective. Normally, if you ask to the simple person that if you want to invest, that what you want. So everyone is saying that we want high profit. We want a profit against our investment. But as a corporation, they are not looking much for the profit objectives, because I will tell you 2 reasons. The reason number 1 is profit is uncertain, and it is not mentioned that when you will get how much profit. So timing issue and return issue, both are the big issue when we are deciding about the profit maximization. So that's why we are mentioning that it is not a well-defined financial objective. Which year's profit, because we don't know that the last year we got this profit, again we are going to be repeat, or we will go high profit, or this year maybe we will suffer. As you know that every year some different situations are there, some different consequences are there, so you cannot be fixed your profit. So that's why this goal is not a realistic goal. Also, we can say that shareholders will not be welcome higher short-term profit if long-term profit are damaged. They know that if they are running their corporation, so they will not look only today's profit. They will look the profit forever. Here I have very good story. You may remember that story. A farmer have a hen. That hen is giving that golden eggs. Every day the routine of the hen is giving every day 1 egg. He is taking that egg and selling. One day the greediness increased, and someone suggested that why you are not cutting the stomach and get all eggs. He cut that hen, and he didn't find anything inside the stomach, so he lost everything. So the owners, shareholders, they are very much aware about this story. Understand? So they are not going to damage their corporation to get high profit in a particular certain time to lose the profit for a life. So they are concerning for long-term profit. Company may increase future profit by cutting year's dividend, investing freed up cash in firms. Freed up means the money sometimes corporations are having that is not using regularly, just idle money. So sometimes they are using that money to increase or accelerate their profit, increasing instead of increasing the price and giving the damage in the market. So not in the shareholders' best interest in the company earn less Then opportunity cost of capital. This is also their concern. In continuation, again, the shareholders desired wealth maximization. So what we get to know that they are not looking for the profit maximization. They need something else. They need something different objectives. What is the different objective? Shareholders wealth maximization. They need to know that how we are going to be increase our wealth. So here, when they are thinking to increase their wealth, they have some conflict between the management. That conflict is arise with the agency problem. What is agency problem? Agency problem represent the conflict of interest between the management and owners. Owners means shareholders. So let me brief more about the agency problem. Do manager maximize shareholders' wealth or managers' wealth? What is the meaning of shareholders' wealth and managers' wealth? Shareholders want to increase their wealth, but manager want to establish a ethical or legal way to establish the wealth. So this is a conflict because shareholders always want to get more value in the market in a different ways, but managers want everything on ethical basis and a systematic way. So that's why they are having conflict between them. Managers have many constituencies. We can say that stakeholders means managers are not only considering about the owners or shareholders, they are considering many persons those are associated. Like we are also associated with the project whenever we are taking any product from that particular corporation. Like suppose you are purchasing a Apple mobile phone and you are using your data, your all information in your phone. Apple company have information, what is your passwords, whatever your bank details, everyone is inside and they can misuse it. But managers are not ready to do it. So this is the problem. They said that we will not disclose the data. If you remember that maybe one case was there before, FBI, American organization, they asked some data from the Apple company and they said that no, we will not disclose. This is a part of our agreement between the customers and the company. So we will not share because we are going to be responsible for stakeholders. Even though someone said that we will give this much of money to share the data, they will not. So this is the responsibility of manager to take care about the shareholders. Not only shareholders, stakeholders. Stakeholders means all stakeholders, either the customers or the manufacturers or the employees as well as shareholders all. So they are looking for everyone, not to one. Stakeholders, I will explain more here. Anyone with a financial interest in the corporation means implies. They are also having interest. They are getting salary from the corporation. Manufacturers, retailers, creditors, and even the citizens. They are having interest or we are purchasing any product from the market. We are paying the money. It means there is a financial transaction. So when we are talking about the stakeholders, it will be start from the shareholders to the citizen. We have all one. Like I will just explain to you. First shareholders, then we are having the creditors, employees, government, and citizens, etc. Agency problem also showed some point like managers are agents of stakeholders and are tempted to act in their own interest rather than maximizing the value. So they will take care about the society, not only the shareholders. What is the agency cost here? Value lost from the agency problem or from the cost of mitigating the agency problem, it is known as agency cost. Because if they will think to increase the only wealth of the shareholders, they will increase. But they are not considering only that, they are considering that how to show or how to share to the society or stakeholders. So the cost what they are going to be bear over there, it is known as agency cost. For more understanding, again you will put your question bottom of the video. Definitely you will get your answer soon. Corporate governance. The law, regulation, institutions, and corporate practices that protect shareholders and other investors. This is known as corporate governance. The financial goal of the corporate concluded. The investment trade-off. in finance we are having so many principles. The important principle is investment trade-off. So we'll discuss about the investment trade-off. Here the hurdles rate, or we can say that cost of capital. It means once you are investing, you know that easily you will not get profit. You need to wait or bear some cost. So against the investment cost, against the waiting period, whatever you are going to be get extra, that is known as hurdle rate or cost of capital. Minimum acceptable rate of return on investment. This is also, we can say that what is the investment trade-off rate? Minimum acceptable rate. What the minimum we will accept? Definitely if all companies are giving me some return against my money, so this is the minimum acceptable. If everyone say that if you give me money, I will give you every year 10%. So it means I will accept minimum 10%. But someone will give me more, I may go over there after the analysis. We'll discuss later on regarding this. Opportunity cost of capital. What is opportunity cost of capital? Investing in a project eliminates other opportunities to use the investment cash. It means whatever opportunity, suppose sometime opportunities are arising in the market, we have to go with that opportunity. So if we are having additional fund, we can avail that opportunity. That is opportunity cost of capital. We are having minimum return from the market, but if we got the opportunity, we'll go for that. This is opportunity cost of capital. In simple way, just will explain that how we are going to be manage the cash flows. So through the method investment trade-off. Here in the bottom, if you saw that it is written there, the arrow represent possible cash flows or transfers. So we know that cash is coming, the top arrow means this cash is showing that cash is coming to the financial manager, and financial manager are investing in a project. That project should be a real project. It means they are going to be either in trading business or manufacturing business. The same time we can say that either financial manager will be give this money to the shareholders, as you know that in form of dividend. Again, the shareholder can invest in the available opportunities in the market. Whatever opportunities are there, they can invest their money. So in bottom, you can find that 3 black arrows. It is showing that investment. So anyone can be any investor can be invest in your project, or alternative pay dividend to the shareholders, or shareholders invest for themselves. So they can invest for themselves, for their need, their wants, or their activities. So this is the introduction of corporate finance. Hope you understand everything. If you have any query regarding this, I'm going to be close this chapter. This is the end. Thank you very much to being with me. And as I told you that after completing this video, you are having opportunity to give the comments, your suggestions to improve, or your queries, what you didn't understand. I'm ready to explain you everything. If you want to send me a personal mail, my mail ID is there. You can go through his mail ID. You can send your questions, and hopefully as soon as possible, I will return your questions with the right way. And at the end, but this is most important, that don't forget to like and subscribe my videos. I am doing efforts for your knowledge. Let's learn with me. Goodbye. Thank you very much.